Hello and welcome everybody to today's Commodities Corner. Just before we get started, a very quick check-in again, guys. You can hear me okay? Fantastic. So we've just got a disclaimer to go through and then we will get started with today's Commodities Corner. Okay, perfect. So welcome everybody to today's Commodities Corner, presented by myself, Phil Carr, at the Gold and Silver Club. During today's session, we will be covering live market analysis. We will be providing you with a watch list of trading opportunities, a forecast of where we see gold, silver, oil heading next, answering questions, and of course, we will be providing live support as well. So let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, the energies, and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Our team of experts has trained and mentored over 100,000 traders from all over the world to increase their wealth and generate substantial income through commodities using our exclusive research-driven strategies. So for more information on the Gold and Silver Club and our expertise, please visit our website, which is www.thegoldandsilverclub.com. Okay, so with that, we'll have a look at the charts very shortly. Before we do so, I will just bring you up to date, month to date, relative performance now as we get towards the end of January, just so you've got an idea of what have been the best performing markets and the worst performing markets so far in 2017. So leading the way at the moment is oats. The price of oats up 17% so far in 2017. Coffee, which has gained over 10%, platinum, which is up just under 8%, copper up 6.9%, palladium up 6.2%, cotton up just over 5%, sugar up 5%, silver up 4.7%, wheat up 4.4%, soybeans up 4.2%, and gold, which is up 2.7%. Some of the losers so far this year have included natural gas, which is down significantly on the year, down 12%, heating oil down 5%, crude oil and WTI and Brent just down approximately 2% for the year. So with that, we'll have a look at the charts very shortly, and we'll talk you through some of the trading opportunities which are lining up on the energies and also the metals as well. We'll be looking at two types of trade, the higher and lower trade. So very simply, if you select higher, you win the payout if the market exit price is strictly higher than the entry price. If you select lower, you win the payout if the market exit price is strictly lower than the entry price. So essentially, when you're using this type of trade, you're looking to get three things right. You want to get your timing of your entry right. You also want to get the direction of the market right, and also your timing of exit right as well. If you get all of those three correct, you then have a winning trade. So we'll talk you through that, and we'll have a look at the markets now as well. So I'll just bring you over to my chart so you can have a look at the technicals. We'll go through the metals first, and we'll move over to also the energies too. So I will just share my screen with you. It should just pop up for you very shortly. Okay, perfect. So you should be able to see my screen right now, and hopefully you can also still hear me as well. Okay, so just a very quick checking, guys. You can all still hear me okay, and you can also see the screen too. Yep, fantastic. Okay, good. So first of all, we will start off with gold here. And gold's been an interesting one over the course of this week. So on Monday this week, gold had its highest close in 2 months. So we closed right at resistance here. We had a move all the way back up to the monthly pivot, which is sitting at $1,219 per ounce. Now, for those of you who were on our training session on Tuesday, we discussed where gold was at a very important event area. If gold was able to break through $1,220 per ounce, it had the potential to continue to rally back towards a 1250 zone, and we could have just had a significant breakout beyond that level. There was a lot of clean air for a potential rally here with gold. Also, on the flip side, if gold was to break through 1200 and close below that level, it had the potential to break down to 1185 first of all. And in fact, we discussed this area. We were looking for a potential retracement back down to 1180 to 1185 if we saw gold break through the lower end of its trend channel and close below that level as well. That is exactly what happened on gold this week. So essentially, on Wednesday, we saw a break below the trend channel. We closed below this level. We closed below this important zone of support, closed below the previous day's low as well. And subsequently, gold has continued to break down. Now, that has also offered a short-term sell-short opportunity to take advantage of momentum to the downside here with gold as we've come all the way back down, retested the monthly pivot, and also just shy of the 50-day moving average here as well. Currently sitting on gold at 1,184 US dollars per ounce. Now, this is also an important zone of support here for gold as well. The 1180 level will be the next major zone in which gold is going to try and defend here as we go into the weekly close and as we head into next week as well. So we're getting a bit of a bounce at the moment. We just had the US GDP numbers come in as well, which have been slightly negative for the US. And with that, we see after today's run up this morning, break above yesterday's high, we're developing a bit of an inverse hammer on the US dollar index, which is the chart which I've got up at the moment. And you can see very clearly we're stuck in this range. We've got an overhead trend channel, which is providing resistance on the US dollar at the moment. We just come back up towards the upper end of that zone, and right now getting a bit of a rejection candle forming over the course of the US Open here. So we'll be watching that very carefully today, the US dollar, and also the inverse correlation that, of course, has with gold, silver, and a number of other commodities too. So what action can be taken at this point on gold? Well, essentially, if gold holds this level, if it holds 1,180 as the low, and we get a bounce from 1,185, I would look at a buy opportunity for gold here if it holds this level for the price to be higher going into next week if we get a break back above the daily highs. So what does that mean? Well, essentially, if gold today can get a break back above the high here, which you can see, the high is 1,190 US dollars per ounce today. If we get a break above that level, so 1190, I would look for a buy opportunity for the price to be higher going into next week. So that is the major zone looking at the moment. If we do get a break below 1180, and particularly if we see gold break and close below the 50-day moving average, which is sitting at the moment, it will continue to move, but it's 1177. If we close below that level on a weekly closing basis today, and in fact, I'll bring you over to the weekly chart, if we do get a close below that zone, it is bearish for gold in the short term. You can see also where we're sitting right at a key Fibonacci retracement level here. And if we break and close below that level, we would expect further downside. But if this is just going to get a bounce off this zone, it could also be a good buying opportunity, okay? So look at that zone at the moment for gold. If we go over also to the other metals, palladium, interesting fact on palladium is the move that we saw on Tuesday, or actually Wednesday, excuse me here, this big sell-off to the downside was palladium's biggest one-day move in 10 years. So this huge move that we got, tremendous sell-off to the downside, 7% move in one day. Up until that point, palladium was the best performing commodity of 2017, was up 18%, and it subsequently had quite a large dive on Wednesday, follow through yesterday. It is getting a bit of support at this zone at the moment. You can see we're sitting around 720 US dollars per ounce at the moment. We've got a level of support which we're currently finding palladium consolidating at yesterday's low as well. So you can just draw a very simple level of previous resistance, turn support around the 700 US dollars per ounce zone. And I would also look at the potential if palladium does get supported at this area for a buy as well. What would I look at for a buy? Essentially a break above today's high, especially going into next week. So if we break back above 730 US dollars per ounce on palladium, I would look for a buying opportunity for the price to be higher on this market. Palladium has been one of the best performing commodity markets this year, had a tremendous move last year as well after the US elections. That was a 25% move over the month of November, so a huge gain to the upside. So I would definitely keep an eye out for further opportunities to re-enter into palladium. If we do get a break below yesterday's low here and we get a close below 700 US dollars per ounce, short-term momentum will be bearish, and I would look for a target back down to the 100-day moving average, which is sitting at 690 US dollars per ounce. But in the short term here, looking for pullbacks as buying opportunities on palladium, but it's dependent on which levels get breached. So again, would buy palladium on a breach above 730 US dollars per ounce to the upside, would sell it on a breach and a close below 690 on this market. Now, also moving over to platinum and silver as well. Platinum, you can see here, no surprises. Platinum is also pulling back as well. Platinum did provide us with a buy opportunity actually towards the end of last week, where we had a pullback back towards previous resistance, turned into support, produced a breakout back up to the monthly pivot, and it's since just been consolidating. It's not given back as so much of the gains as both silver and also gold have given back over the last week or so, and we can see we're actually just slowly but surely pulling back towards the 100-day moving average. And in fact, the support zone with the 21-day moving average and the 100 MA currently sits at $960 per ounce. So I would be looking again. Short-term momentum is to the downside, but any bounces, any rejection candles, any very clear buy signals here in terms of candlestick setups, and also key levels of previous resistance which turn into support, could lend towards the next leg up here on platinum as well. Today will be quite an important day. If we look at platinum on the weekly chart, it does have an inverse hammer in development. And of course, if we break at and close right at the weekly lows here, we could expect more short-term downside next week. Now, it is important to understand next week we've got the FOMC statement on Wednesday, which will no doubt provide some trading opportunities, particularly given that we've had relatively significant pullbacks on palladium, gold, silver over the last few days here. So we could line up for some good buying opportunities on Wednesday on the FOMC statement. Also, Friday is non-farm payroll as well, which is likely to be a catalyst for more movement too. So if we move over to silver, silver has also, over the last 3 sessions, been breaking down lower highs, lower lows. We've had a revisit today back towards a 50-day moving average and a 21 MA. I'm looking at the potential for a buy here on silver at the lower end of the trend channel, which currently I'll be looking at $16.30 per ounce here as a potential zone where we could see a bounce on silver. So consider that if we get a move back towards that level, which would also meet around the 50 MA here. If we do get a bounce at that zone, I'm looking at the potential for a buy here. Short-term momentum is down. We've been breaking down now for about 3 or 4 days. Once we came back up to the upper end of the trend channel, silver has essentially rotated all the way back from support going back to mid-December and the FOMC statement, and it's rallied all the way back up to resistance, where it's just managed to run into some overhead level of resistance with this overhead trend channel, and we're just consolidating but slowly but surely breaking down. And I'm looking again at the 1630 level is the level I'm looking for silver to break down to, and then looking at opportunities around that level. So just make sure you are aware of that if you trade silver, that those are the next major zones to have on the radar. Now also, if we go over to oil at the moment has broken out of its pennant formation. So oil has been consolidating over the last couple of weeks. It's been consolidating actually throughout most of the Christmas period, over the festive period, continued to consolidate. It is still stuck in a range. We did develop a pennant formation earlier on in the week, which is broken out to the upside. However, there is still quite a lot of overhead resistance on this market. You can see it had a rally back towards resistance yesterday, failed breakout above $54.25 per barrel here. It has revisited the lower end of the pennant formation and found a bit of a support at that zone during the earlier part of today's London session. So we're getting a bit of a bounce off that level. Still in a bit of a decision mode here. We've been looking at the potential for a sell here on oil, and that has been our preference over the last week, to look at weakness on here oil, particularly based on the weekly charts where we've been rolling over and slowly but surely creating lower highs, lower lows, and we've been stuck in quite a tight range over the last 3 to 4 weeks here. Today's weekly close will be important. If we break back below $53 per barrel here, that would start to provide further momentum to the downside here. We could see a break back down below $52 per barrel, and we could ultimately move back towards 50. If oil manages to hold up, and if it breaks and closes above $54.25 per barrel into the close today, that would put momentum in the side of the bulls, and I would look for momentum to the upside, targeting back towards the 55 to 56 US dollars per barrel zone. So we are at a bit of a decision point here with oil today. It's still consolidating. We got a higher close yesterday, a higher high, a higher low, and a higher close, which is bullish short term. However, today we're seeing a bit of back and forth action here. So we could continue to consolidate oil still needs to do more work in order to break higher here and really begin to build the momentum. We are at, in terms of the net long positions in this market, so the amount of traders and funds which have got net longs on this market right now is one of the record highs. And what does that mean? Often what you can see is when they are at a record high net long position, which means they've got a record amount of buy positions on this market, that can often lead to a rolling over a price or a top of the market as well. So it's just worth bearing in mind that at this point in time, we still have got a bit of vulnerability here for oil going any higher. But we'll continue to watch that into the US session today, into the close. What would I look at in terms of buy or sell levels? Okay, so essentially, if we break above $54.30 per barrel today, that offers a short-term buy for the price to be higher, either by the close of the day or going into the close on Monday. If we see oil break back down again and break back below $53 per barrel, that will be a sell for the price to close lower by the end of the day, or as we go into early next week as well. So oil, I'd be looking at that for a buy or sell just based on which way this consolidation is going to break out at the moment. So there's lots happening on the market. There's lots to monitor as we go into next week. Most notably, we're very likely to get some explosive moves as we go into next week's FOMC statement on Wednesday, and also non-farm payrolls on Friday. We will be hosting a post-non-farm special Commodities Corner next Friday as well, which I would definitely encourage you to join us for. You can look at gold right now and see we're getting another retest of 1180. The most important zone right now for gold to hold for the bulls here would be 1177 to 1176. That is where the price meets the 50-day moving average. A decisive close back below that level would indicate we're going to get more downside momentum for the precious metals, and a close above that zone, and if we hold above the 1185 zone into the close, gives again upside momentum to the bulls as we go into next week. The trend will still be to the upside going back to the beginning of January. So with that said, let me just talk you through our top trades over the last week and how we've really benefited from the moves that we've had on commodities. So here is our portfolio performance, trading performance update using our exclusive research-driven strategy. So over the last week, we've taken advantage of the breakout in platinum after we got a temporary pause, and then we broke back out. We had a nice precision setup, taking platinum back up to the monthly pivot, entry at 970 there for the price to be higher. We also benefited from a sell here on palladium. Palladium produced 2 rejection candles after it broke out and produced a bull trap here at the 18-month highs. Got in just on this at 765 for the price to be lower. It actually collapsed the price after that, and we had a nice profitable trade for a sell short. It was a 7% move in one day. And of course, you'll be very familiar with the gold trade for those of you who've been following our Commodities Corner that we've been in since the start of the year, where we've had staggered exits on this trade. We closed another position now just earlier on this week on Monday from our entry at 1146. We are now out of our gold long position. We've closed out of that trade now, took advantage of the January effect over the course of this month. It's been very profitable for us, and we're now neutral on gold and waiting for the next entry. So if you would like access to highly profitable live trade ideas shared with you, ready to implement for instant results, to get exclusive access to our private members live trading room, all you need to do is go to www.jointhegoldandsilverclub.com, complete the application form, and we will get in touch with you ASAP. So essentially, guys, if you'd like to get kept updated regularly with all of our trade setups, the exact levels that we are entering, exiting, take profit, entry levels on all of the positions, be able to join our live trading rooms throughout the week and gain access to our private members academy, all of our training material, and also have mentoring and coaching, all you need to do is make an application to join the Gold and Silver Club. I'll just talk you through that in a little bit more detail. Who's it for? And why should you join? Essentially, whether you're a new trader and you're looking to develop a solid understanding of the markets and really fast track your results, or even if you are an experienced trader but you just want to take your trading to the next level, the private members live trading room is definitely something for you to consider. As a member of the live trading room, you get access to our commodity market analysis, where we go through highly profitable trade setups, sharing exact entry, exit points, profit and stop loss levels, as well as walk you through live trade ideas ready to implement for instant results. You also get trade notifications via email and SMS so you don't miss out on opportunities. These get sent out to you instantly every time there is a new trading opportunity, and you get access to our commodity research and market insights. So private members get exclusive access to our proprietary trading research and market insights to help boost your win rate and make sure you're getting on the right side of every trade. Our research is really there to give you the ultimate edge in the markets and fast track your results. So again, private members live trading room includes exclusive weekly live trading room webinars, live trade setups ready to implement for instant results. You get real-time notifications via email and SMS so you don't miss out on profitable trades. Exact details of where to enter, exit, place a stop loss, a weekly trading plan with a watch list of trade ideas for the week ahead, live trade support to help you through each trade, and also institutional level trading research and commodity insights to give you the ultimate edge in the market. So again, all you need to do to access the private members live trading room is go to www.jointhegoldandsilverclub.com, complete the application form, and we will get in touch with you ASAP. Also, just make sure when you make an application, guys, that you mention that you have been on the binary.com session. We do have a special promotion for attendees from binary.com, whether you're watching this live or the YouTube recording afterwards. Just if you are making an application, do make sure that you mention that you've been on binary.com. Okay, fantastic. So with that, guys, I wish you a fantastic weekend. Good trading. Have a profitable one. Of course, very much look forward to working with those of you who will be making an application and joining us at the Gold and Silver Club, and we'll speak to you all very soon. Okay, take care, guys. All the best. Thank you. Bye-bye.